Thanks for watching. Today I'm working more on my stock market model. So I thought I had something really good. My plan was to start paper trading this most recent Monday. It's currently early Wednesday morning. But it turns out I wasn't ready. So I ran into some problems. So I'm going to be looking more into those problems today. Hopefully I can troubleshoot them. And I'll either be ready to start paper trading really soon, or I'll have to start going into a whole new model. So before I get into things today, let me go over the overview for the project, what I'm working on, what's happened recently, and finally I'll get into what I'm doing today. So these are the goals for the project. The first goal is to beat the S&P 500 by a significant margin while staying market neutral. So the S&P goes up on average 6% per year. I want to do significantly better than that and get 18 to 24% per year, but I want to stay market neutral, so I shouldn't ride the ups and downs of the market. This strategy should give positive returns regardless of the market conditions. Now, I have a second goal for this, so I'm writing all of this code in Python, so I'm also generalizing it and making it so that anyone can create these sorts of models for themselves. Right now I have this whole thing, the outline from the stock universe, training the returns model, testing the returns model in every which way, and creating a portfolio level strategy. You can do all of that in under 100 lines of code. So if you're interested in that, go check out the GitHub, fork it, download it. Let me know how it works. Let me know how I can improve it. And of course, if you find it useful, please star the repository, watch the repository, and follow me on GitHub. So this is the outline. I'm starting with I have data going back to 2011. You don't want to use all data. You want to isolate a stock universe to train your model on. So I've done that. I've got a universe which works well. I found a model which works well a little over a month ago. And then I implemented some portfolio strategies. So what is the model and why am I confident in it? So this is a single model that's tested from mid-23 through the end of 25. And you see all the metrics look really good. I'm not going to go through them all, but I'm looking at these metrics in the red box, and I'm beating all my metrics by a significant margin, except for the standard deviation of the information coefficient, which is at the lower end of the range I'm looking for. So not only are the metrics really good, the decile analysis looks basically perfect. It should be monotonically increasing. That means the lowest decile is the worst performing, top decile is the best performing, and each decile is higher than the previous. And that's exactly what we see here. Finally, I tried implementing a portfolio strategy on this. Basically, anything I tried did well on the single model trained from 2023. But when I trained it, I tried going from 16 through 2026, and it failed from 2016 through 2022 and only did really well after the midpoint in 23, just like the previous model. So I looked into this. If you look at the decile analysis for each model in the walk forward, it's not perfectly monotonic each year, and the spread changes a bit. So I decided to do a new model and drop out features which had a coefficient of variation above 1 or a mean importance below 5%. And you see this performance is a lot better. Basically, I'm going positive during the whole time range, but failing during COVID. That's a much better problem to have. I was implementing... I decided to go with an even more updated model. I added in mean reversion and volatility features neutralized to sector. They were already in the model neutralized to the market, so I added in new features neutralized to sector. That's something that I found improved the model previously, and it seems to improve it here. So finally, I was doing the portfolio strategy on close to close. When I changed it to be open to open, this strategy looks really good. The worst drawdown is 18%. The worst drawdown duration is 164 days. So this looks really good, but it's failing during 2026. So yesterday I got the walk forward, including the 2026 data. So I want to go and get that portfolio today and then test it Basically, if here are the results for 2026. So, where is it? Yeah, this is if I implement a basic portfolio strategy on 2026. So you see, it's kind of noisy. There is a drawdown, draws down 17%, but it does recover, and the duration isn't that long. So it could be that, and if you look at the time period for this, it basically did okay in the beginning of the year, and then it failed when the war broke out. So. It's also failing here right at the beginning of the year. War breaks out, recovers, war breaks out, flat lines, recovers. So I'm going to look at the whole model that goes all the way, the whole walk forward. So let's get that. So Model Explorer. Test model 25 is what we're getting. Okay, so this is the path for the model. And let's get walk forward portfolio. Now we could do here wf.get model data and paste in the file path. Okay, so this is the walk forward going through May 2026. So let's turn that on, get walk forward portfolios. Okay, so now we're going to get that portfolio. But it still did well during those years. It's like 2016 to 2019. That's what's confusing. So the bottom decile of Sharpe ratio predictions is giving the highest return. Why would that be? Equal weighted decile spread is a specific implementation. Take every stock the model predicts. It's the simplest way to turn a cross-sectional signal into a portfolio. Wait, why is it training a model? Oh. I need Portfolio Explorer. I trained instead to predict forward sharp and got No, I've never worked for a hedge fund. That'd be a fun job someday, but ideally I'd work for myself and either I could contract with a hedge fund or have my own hedge fund. But no, I've never worked with a hedge fund. It seems fun though. Sounds like a cool job. Contains a hidden trap worth surfacing first, and once you see it, the answer to which model should I use becomes much clearer. Your IC comparison is comparing two different problems of different intrinsic difficulty. When you say my returns model uh, didn't meet IC goals, but Sharp model did, you're implicitly treating IC as a constant difficulty benchmark. The information density available for prediction is dramatically different. Forward returns are daily to weekly frequency, are close to a martingale. What's a martingale? Oh. Forward Sharp is dominated by volatility. Oh. 0.025 would be way better than I have. Okay. From what I've researched, it's hard to beat hedge funds as an individual contributor. Yes, that's certainly the case. Hard to get access to funds that hedge funds have. They literally move markets. Makes me question the morality of it all. Do you ever code open source? Would love to contribute. Yeah, but to be honest, do you have experience with Git? Because I don't have experience collaborating with people on Git. So I'm not sure exactly how it works. But yes, it is. You can get it in the repository in the description. But yeah, probably message me on Discord. The link for that's in the description too. Message me about it on Discord and we could figure out how to do it. Because I've never collaborated on a repository with anyone. So there's going to be a bit of a learning curve for me. If you've done it before, that would make things a lot easier. Okay, so did this finish? So what if we execute that strategy here? Okay, so let's do simple volatility scaling. It seems like I have a binary choice. And use a returns model and weighting from the volatility model, or use HRP. I don't think I can implement both the dual model strategy and HRP at the same time because HRP does not weight based on the output of a volatility model. Is this the case? Why or why not? Also answer this question. I forgot what's my question. I guess I'll just ask that. Let's see, did we get the strategy? No, still computing. I guess it'll take a while because this has a lot. Hey, Manversing. You need a coding project, man. Okay, it should finish here in a sec. correlation structure variance estimates. So the strategy would have had its worst drawdown during 2026, but it's recovered. So what do I conclude from that? I don't know. And the drawdown was basically as bad as 2016 was. Doesn't get as bad as 2020 was. But so is it still going open to open? Go to portfolio. Because I mean, yeah, let's look at the drawdown duration. 425 days. Hey, what's up, buddy? Come here. So how do I'm trying to figure out, a couple days ago I got way better results going open to open. Come on. Come on. Okay, you want to stay there? Yeah, so here's close to close. I was getting that, so 25% drawdowns. I switched it to be open to open, and it did way better. Am I missing something here? Is there something else I had on? Or, yeah, what's going on? Okay, so it should be going open to open still. Managed back test, HRP back test. Okay, so in init, price history, get the opens. Beta neutral 5, 1.5, 5 longs, 5 shorts. Huh. Yeah, what is different now? So the only thing I could think is I had some different parameters. So maybe I'll try 0.08. Hey, who's a good boy? Come on, come up. Okay. Yeah, this isn't fixing anything. So yesterday, I was able to get a much shorter drawdown duration. So what if I just put this model back on? Let's look how that performs. Maybe the models are just different. Yeah, I don't know. I must have had some other scaler on. Let me try turning on spread scaling really quick. Yeah, so I must have had some other waiting on. Alright. Hey, Mr. Moaner. How are you? Hey, Hailfire. Alright, so returns model dictates stock selection. Okay, so we'll make green triangles be the inputs. How do I rotate the text? So the returns model feeds the stock selection. Then we have Okay, so inputs are green. These guys, what color should we make them? Maybe nice bright blue. And then output we can make red. Okay, so this is a new strategy we have. I need to. Yeah, what was going on in that? What's that portfolio that I got here? And how do I assess the performance on the whole model? So I could just try implementing this. Okay, so that's going to be it for my stream today. I'm going to work on building this strategy next time, and then I'm going to work on seeing maybe I can start paper trading with that portfolio strategy I have. So that'll be what I look at on the stream later today. Thanks for watching. Have a good rest of your day. Adios. Okay, so that's going to be it for my stream today. I'm going to work on building